Happy birthday.
Hey, thank you. Good morning. Interesting morning today. Whenever the market is not open, and and we've had so much activity, I always like kind of look back at it, and um, it's interesting when literally nothing's happening and we're not open to just kind of take a breath. Saturdays are always like that. Thank you for the birthday wishes. I appreciate it. Oh, that's also a weird feeling. 62 today. Kill me now.
49 years of trading. Always easy to remember because it's my age.
Yep. Gosh. I remember my first trading event too. That almost feels, I don't want to say it feels like yesterday, but I remember really vividly. The first thing I ever did in the trading world, which was I went with my father from our house to the Peninsula Center, which was a little shopping center, strip mall kind of thing of what a strip mall was anyway in those days. This would have been 1973, and my father's one of my father's stockbrokers had an office there. His name was Al Reintees, and he worked for Dean Witter Reynolds, if you remember them. And I remember we went in and we went through all the fancy stuff. I opened my account, I brought in my money, and then did my first trade. It was like, wow, coming of age. Anyway, and that ComSats trade that I told you guys about ended up getting acquired by the forebearer of MCI, and I did really well. Probably would have been better if I hadn't, because I got pretty cocky after that. Anyway, here we are many years later, and the game hasn't changed much. All right, first of all, I'm curious. Let's start with the quiz. I put this little quiz up here. In one sentence or a few bullet points, define good scalper or what a good scalper does. And a few people answered, and a few people, you guys got some good points here. Nobody really nailed this one, though. I was surprised. I thought somebody might. I was even going to offer a gift card to see if anybody nailed this one. But anyway, so let's see. Waleed said, take quick small profits. 2 to 4 ticks. That's something I do tactically. It's not necessarily an example of good scalping, but that's minimize losses absolutely. Identify which strategy to use given the market condition. Okay, that's always true. That's whether you're scalping or not, but that's true. Trade around extremes, edges, and ranges. That you got very close to a really important one with the fourth one. What are we doing as a scalper? And so you got really close. I'm gonna continue reading them, and then I'll explain what I mean about and what I was looking for here. Jeff says, consistently extract money from the market. That's one of the things I was looking for. Small winners, not necessarily, but big winners, yes, any of those. Small loss. No big losers, in other words. And okay, that again, those are pieces of it. John says, condensed version, know your setups, continually analyze the market, know your risk, and know your goals. Those things would apply to any trading, I think, but those are true. Elena, highly paid hourly work. Yep, definitely is that. Where we take small profits while having low risk entries using high odds setups. This is interesting. You, again, got very, very close to what I was looking for here, the second half of this. And the result of that is, in fact, highly paid hourly work. Jose says, identify imbalances and inflection points with high probability setups using informed discretion. Okay, that is also good. Brent says a scalper uses good entries for quick profits, minimizing losses. Okay, also close. And all of these are correct. There's nothing wrong in any of these. Just nobody was really right on what I was looking for, which is the following. The whole idea of scalping, and I know this sounds a little bit counterintuitive, but think about it for a minute. The whole idea is to spend as little time as possible in the market. That's really what I was looking for. And I'll continue. There's more to it than that, but that's the first part. And again, you guys all kind of uh, alluded to that, but specifically, it's really simple. If you're in the market, you are at risk, and if you're not in the market, you're not. So it literally doesn't matter how good your setups or your win rate or anything else is. You could have a 90% win rate, and your average win is $50,000, but you still are going to have losers, and the only way to have a loser is to be in the market. So the first thing I was really looking for is that a good scalper is only in the market as little as possible when the odds are overwhelmingly in their favor of what the very next thing that's going to happen is. Because for example, taking small profits, that's a tactic of a scalper in a volatile market. But there's a lot of trades, look at the trades, for example, that are high volume reversals. And there's a couple of examples we had during the week where I didn't take small profits. I took whatever it would give me. And in a couple of cases, it was 20, 30 ticks really fast. And on those, I didn't take profits immediately. The objective, and again, this is really subtle, it's to take profits as fast as you can, protecting yourself against losses. If you get a high volume reversal and you can get remember the tactics of that, get a stop in as fast as you can to protect your profit. Oftentimes when you do that, you catch ridiculous runners. I've had trades just catching a high volume reversal that go 60, 70, 80 ticks. And I don't take quick profits on those. The idea of the quick profits is protecting yourself from losing. And that's what that's about. And that's why practice is so important. So again, to just kind of summarize this one, what I was really looking for was as little time as possible in the market, and be able to take quick profits if that's what you need to. But anytime you're in the market, you're at risk. So the idea is not to be in the market, to go in when the odds are overwhelmingly in your favor as to what the next thing that happens is. And so that's what I was really looking for. And you guys all got pieces of that. I did put a easier to read version of the setups, the bullet points in here, and I just wanted to go through that briefly. Whoops, I hate when I do that. Just to make sure everybody's really clear. This is kind of the debrief and review portion. Today's session will not be particularly long. We're going to just kind of go through a summary of everything we talked about real fast, and I'm going to look for questions and try to clarify anything anyone doesn't understand. I'm not going to present anything new or anything like that, but I really want to be clear about, think about it. If go back to the question, what's a good scalper do? Well, they spend as little time in the market as possible, and they go in when the odds are overwhelming that they can take profits out quickly. And if that means grab 2 or 3 ticks, or have a setup that takes 2 or 3 ticks and then leaves a potential runner if it's there, those things all apply. So, but the one overwhelming rule always, consistent with my 3 rules that I talk about, good trades work right away, don't lose money, always take profits. That the combination of that is, if you're in the market, the odds have to be in your favor for what's going to happen next. And you really need to be out of the market if that's not happening. There's no such thing as sitting in a scalp trade waiting for it to work. You just don't do that. And you saw a couple of examples again during the week where there was one I took a scratch on really fast, and somebody private messaged me later after that, why did I scratch that out so fast? It ultimately would have worked. And I said, because what? Quick quiz question. I'll answer that one. Why did I scratch out so fast when that trade ultimately would have worked? Because when I went into it, I had an expectation of the setup I was trading and what would happen next. I went into it and that didn't happen. It could have, but it didn't. And it started to look like the risk of the opposite happening was substantial. So that's why I immediately scratched that trade and got out of the way, because it looked like I could have gotten really badly offsides fast. And so again, this is really about staying tuned in to what's happening right now. And you're there to grab money quickly. If it's clear at any moment that that's not possible, that's why we get out of the market and we stay out of the market. We go in when the odds are really high that we can see profit quickly. So how does that happen? Well, I summarize the setups quickly here. And again, I'm not intending this to be step by step. These are just the things you should be thinking about if you're doing that particular setup. And I'm working on my playbook and a revision of my playbook that I'll post for everybody in TRG. I should finish it this weekend, but it's just a little more comprehensive explanation of my stuff that I posted before with some updates. But for scalping, this is really the crux of it. So real quickly, let's review this. HMOMO is the idea that the market will suddenly start going one way. And this happens all the time for any number of reasons. The most common reason that we suddenly get HMOMO is a really simple one. New information enters the market. Typically, what are some ways that can happen? Well, a news announcement, economic report, earnings report, any of those things. We break a level. Anything that creates new information can create sudden momentum. And again, the most common one we see day in and day out is news event or something hitting the tape that is unexpected. And oftentimes there's a knee-jerk reaction to that. And that frequently creates reversals. And so HMOMO and high volume reversals often go together. And this is really a key point of scalping, is being tuned in that could happen anytime. And if in fact it does, how should you respond to it? So let's say we get sudden momentum. Join or sit on hands and default to sitting on hands. That's just, you have to react that way, but then you immediately have to think, okay, what is this? I don't go and do research. I don't look at the news to see if something happened. I just look at the type of reaction. And after a while, you start to see the sudden kind of knee-jerky ones are usually news. And they usually turn and go right back to the range. And if they don't do that, then there's usually something completely different, and we end up with a completely different set of conditions. So if you just think about these three things, it keeps you out of trouble if that's going on. Should I join it or sit on my hands? Default to sitting on your hands, and then try to evaluate if it's going to continue. And if it's already stopped, you probably already have a high volume reversal. And if there's a nearby IP, a big fat whole number or a big giant high volume node or the min delta or the max delta or anything else that can tell you this might be a spot that it's going to or that it's going to pause at, that's relevant. I generally don't join high momentum. And I made this point throughout the week. I really like, the minute I see high momentum, I like to start thinking about a high volume reversal, because those are the most visual, easiest trades there are. And they're the most profitable for the most part. Didn't mean to say that many mosts in there, but they tend to be profitable, or they don't work at all. And that's why they're good. And also the nice thing about high volume reversals, and I didn't mention this at all during the session, but I meant to, they tend to be the ones that you can go farther than just looking for a couple of ticks. A high volume reversal that isn't going to be a high volume reversal, in other words, if it's going to be a pause and ultimately continue the original direction, those don't give very big profits on the high volume reversal setup. You tend to get a couple of ticks and then nothing happens. And so it kind of starts telegraphing it to you that you're not going to get your reversal. And so that's a really powerful combination of two things: sudden movement, and then, if it just stops. And we saw so many examples of this, but I decided this was worthy of just showing one or two. This happens so frequently that it's just one of my favorite things there is. Here's one right here. A perfect example. That is a really strong, relatively sudden move up. We were in ebb and flow. And again, it doesn't matter when it was or why it happened. We went up pretty aggressively in big bursts, and then we just stopped going up. That high there was the last time it went up, and then it came down, and the delta rolled over, and then it came down hard, and the delta got harder. And so it's a really clear spot. I mean, if you're wrong, you're wrong, and if you're right, you get a lot of ticks. And here's another one right here. That's a really pretty one. Look at the way the energy rolled over on that one so quickly. This is really, really aggressive. This was, the time of day. This was some news probably, or economic announcements. And then, literally in one bar, the story changes. And the story changes. So get used to looking for those. That's the first thing I recommend people try to focus on if they're new to scalping is looking for high momentum events, sudden one directional moves that have the characteristics of high volume reversals, and play those. The beauty of those playing those new is if you're wrong right away. And the worst case is you'll have lots of little losers while you're learning. And so I really like that combination of conditions. The HMOMO regular trading hours open 5. We did this a couple of times. I just want to reiterate that's a special form of momentum, and you only trade you only play if it's one way, and typically 3 days a week or so it is 2-3 days a week. Join it right away, use a market order, immediately protect yourself and hold on for the ride. You may just get a few ticks, and that's a place where you definitely want to protect every profit you get, because these trades often change personalities really fast. But at the same time, if we're going to have a trend day, these days where we like gap up and we open and we just keep going, or we gap down and we just keep going, that's what a really strong trend day looks like. They're rare. They happen 15% of the time, maybe, maybe not even that much. So, a couple of times a month at most, we get a decent trend day. But boy, if you get in at the open 5 with a good trend order, a trend day scalp, there's one of them in the library from the workshop in 2019 where it was an open 5 and I was trading the NASDAQ, the NQ, and a one lot on the open went for $1,000. Do the math with the amount per tick in an NQ, and then think about that. That was an open 5 trade. It was really obvious. The energy was wicked. I got long with it, and it just kept going. I mean, I couldn't even get a stop under it. It moved away so fast, I didn't have to think about the stop. And that does happen. So it's a really good time when we're at the open to just say, okay, if I get that setup, I can grab some really big money really fast, low risk. And if we don't get the setup, I don't trade. And, as I talked about Surfer Guy, my friend that I've taught this to, that, this is literally the only thing he does in the market. He's never traded past the initial balance, the first hour. He does the opening 5 trade and hangs on with it if it's a trend day, and, till the end of the initial balance. And he knows nothing about the futures market. He uses a 15-second chart, and that's it. That's all he does. And I remember when I first started, explaining this to him, and he first started doing it, I remember thinking, this is just such a perfect implementation of what efficiency in trading looks like. I mean, do one thing, do it really well. Don't let anything else distract you. And a couple of times I've asked him, aren't you curious to learn more about, different things? He's like, one of the reasons I dropped, this is literally what he told me, one of the reasons I dropped out of high school was, no, I don't have any interest in learning more about a lot of things. He said, contrasting you're a big fan of history, talking about me, you're a big fan of history, and you really like to understand all the dynamics, all the pieces, what all the gears are doing in something. He says, I don't. I just want to have the path of least resistance through the world. And I just want to enjoy my time here and have it be as pleasant and as profitable in the way I want it to be. And it was really kind of profound for me, this to have that clear an idea what kind of life you want. But he's implemented the trading version of that perfectly, and that's impressive to me. Particularly me, I'm constantly distracted by shiny objects, like many of you are. Go see the latest thing, and he couldn't care less what the latest thing is because this works. And so anyway, important message there. All right, we talked about high volume reversals. Again, that's my favorite one to learn from. And they happen several times a day in every index. So every instrument, not just the indexes. One thing I want to say about those two things, we did not do anything with NQ because of the conditions. But I got to tell you, when the market settles down a little bit, NQ is really the place to look for the high volume reversal world, because just the nature of NQ, it moves so fast. And, for example, there's a one there. It would have been really hard to play because it was moving so much. This is classic NQ. But the potential, the moves can be so big because NQ moves around so much. So I recommend looking at that, but being mindful of conditions. So here's a classic example. This is a perfect open 5 trade in NQ that became a trend conditions. So, remember, we're 1 minute here. So the open's right there. There's bar 1, 2, 3, 4, 5. So the open 5 is actually over there with a nice down move. And then that down move just kept going. And it kept going. In what way? What did we see exhibited when it started to keep going? Pop-up quiz question. What are we looking at here? Anybody? What happened here? What's happening here? Or what of my other items on here is happening? Up thrust. We have, yes, you have a trending move that's a short, and you're seeing up thrust. So let's look at it. Let me grab my drawing tool. And there it is. Okay, so this is, as I said, where the open was, and the open 5 was a real strong down move that you could have joined, and it would have been profitable right away, and you would have had a low ME. And then it ebb and flowed just briefly after that opening 5 minutes. You can see there's a tiny bit of ebb and flow there. And then it went into a classic upthrust pattern. So, this one doesn't matter because we weren't going down again yet. This is the first one to pay attention to, 43K, and then up on 4. So, that's showing you there's a lot of energy to the downside, and it broke right here. This was an attempt to break that started a low range, and then that's where it broke aggressively. So this is where you should start looking at the energy. And, that one came down, and again, it wasn't quite as aggressive as you would say, I definitely want to join that. And then this had a little too much volume and came a little too high up. You can see it came higher up than that breakdown. So again, it was still tricky here. This trade got interesting, and I'm going to change colors just to show you really clearly where everything got different. And everything got different right here. And this is the kind of stuff you look for. Even though we had good energy down here, we did ebb and flow. We had lots of wicks, and the volume was big down, lower up. So that's an up thrust, but then it couldn't continue that. It made a lower low and then a higher high on big volume. So this entire piece here was really ebb and flow until this spot right here. See, it took that out. And then 1.711, and then big aggression down, 22, up 9. So the pattern formed right here, and then it continued all the way down. Every one of these was much, much less volume than the one on the other side. I accidentally covered that. Didn't want to do that. See, that one's 9 and 22 going down. And this one is 1.2, 25, 4, 9. 6-3. This is right here is when the pattern ends and it goes into ebb and flow, and that happens to be a nice little high volume reversal. Surprise. So yes, this is a perfect little Wyckoff pattern, and this is kind of the perfect storm. If you get an open, particularly if you're trading the NQ, which again I haven't been for a couple of weeks, but normally I would like something like this. This is a setup I'd really like. I'd be in the open 5 trade over in ES, but I would see this had happened. And then right when it goes into this little ebb and flow pattern here, this one, right after those big breakdowns, my radar would really be up, because look where it is. I mean, this is a giant reversal of any attempt to get out of this range. So we have at least potential down to here. That's just really clear at this stage. And then it just started playing out as a Wyckoff up thrust after up thrust right there. And so it was really good. You could have got short, you could have added to the short, you could have traded as a short core and scaled in and out of it as it oscillated back and forth. You could have played this any number of ways. And look at what it did. It came down to that ebb and flow, and it blew right through it. And it ended up making a really nice trend day. So this is the kind of thing that you're looking for when we have the idea of wave volume. So irrespective of what else, it doesn't matter what else is happening. If there's any sort of trending behavior, and I always look for it on 1 to 5 minutes, but really 1 minute is where a 1 minute can be sloppy. And if a 2 or 3 minute cleans it up and there's a really good trend there, then that's what I'm looking for. Just looking for a place to lean on. So let's scoot this over here, and I'm just going to pull random places up to look at that. So let's go look at RTY at the same point. And and just look at some examples and see if we see the right behavior. RTY can be trickier because the volume's lower, but you should still be able to see the patterns. So, okay, let's see. I'm going to just go to an open here. Let's see where we can find it. And literally, I'm just randomly looking around. Okay, here's a nice spot right here. I don't know if this is an open or not, but this is a good one. Okay, so this is 15 seconds. If I was seeing a minute, I would definitely be seeing, a trend here. Obviously, if you just make four fewer bars here, just consolidate it into minutes. And so look at the behavior. A couple of spots. You can do it in here. You can do it in here. This thrust down 3K, up 700, a little bit of a wiggle, and then boom, down 2.5, up 200, down 600, up 300. You can find the pattern anywhere, whether the volume is bigger or small. And that's RTY, which tends to be a lot less volume than you see in something like ES, but the pattern's still there. That's my point, is if you look for it, you will find it. But let's go back just for fun to a 1 minute. And sorry, I should have made a duplicate of this first to do this, but that's all right. All right, and let's stretch it out just a bit. And then I want to go back to a couple of spots. Okay. Here's a really nice one right here, whatever day that was. And again, clear trending behavior. That's obvious. And this tool, if you want to use it, will show you the trend. This is just super trend, the ATR stop, and it's posted in the pit. The range to spring or up thrust from. I want to clarify what I mean by that. This is a simple example here, and it's a really good one. If you look at it and don't read a lot into it, just look at it really simply. We were at a level that we were ebbing and flowing from. We came up to that level. That doesn't really matter. But there's some sort of a top or a bottom. You need the start of that. And if you're looking obviously for springs, then you need some sort of bottom to work from. And if you're looking for up thrust, then you need some sort of top to work from. That's what I mean by a range to spring or up thrust from. By definition, a spring is a low volume pullback in an uptrend, and an up thrust is a low volume pullback in a downtrend. So there has to be a trend, and B, a range to be ebbing and flowing from, right? So this is the beginning of that. And then we have strong down volume that's matched. So this is kind of two-way, and then we get more strong down volume that isn't matched. This is much lower, and then it does that again here and here, and then here and here. So this is a really obvious pattern of that. That the moves up are much less volume, and the moves down not only are bigger volume, but they keep making lower lows. So that is a perfect setup to be trading with this idea of wave volume. And what I like to do, again, I get this question a lot. How do you know you have one? Well, you never do. The point is, if you don't have one, or if it leaves that behavior, it does it pretty clearly. Like this right here was not only the end of that wave volume trend down, but it was a really nice high volume reversal. So this momentum down got a big burst at the bottom. And then again, what are we looking for with high volume reversals? It stopped immediately. Just nothing. It never went lower than that. And in the process of doing that, overwhelmingly energy on the other side and reversal of energy. So see how if you just look for these simple things, you'll see the patterns. And that's why I didn't make this really complicated. I didn't make, there's no, you look for this and then the confirmation is that, these are the factors that are important. And this is a very different approach to teaching this. It's not step by step. This is the driving example. Just when this is happening, what are you looking for? You're not making sandwiches, you're driving. So you're considering the factors and you're making discretionary decisions on what you're seeing. And the beauty of it is, if you just stay dialed into these, you see setup after setup, because these things produce setups all day. Obviously, ledges are really sweet. We looked at a bunch of those. It's hard to do that, when the session isn't running, because, we don't see dynamic ledges. But again, just to clarify or repeat that one, no high volume node between the current price and the ledge. So if, for example, let me just draw a quick picture for that one. So if if this was the top of the session up here and this was the bottom of the session, and we had like, the volume profile, maybe the volume profile was a double D. So it looked like one of these. And then it did that up toward the top. Okay. So the ledge, we can't be down here, anywhere in here. I'm going to change colors again. For a ledge setup to work, if we're looking for a break of this ledge up here, we have to be at least here. You don't want high volume nodes between you and ledges. And obviously the same thing going this way. You would want to be on this side of it, not on that side of it. Okay, so that's obvious number one, no high volume nodes. And it's simple. Why? Because they get in the way. They slow things down. Ledges don't break until they clean that up. Okay, going toward with some momentum. If we're looking at this one, we got to be going that way. And it doesn't have to be strong momentum. It just has to be going that direction. And then we want to be close enough to break it. And, I used to say 6 or 8 ticks. Now I'm saying 8 to 12 because of the volatility. But if these three things are true, this is where that 99% comes in. And, the ledge might only break for a tick, but it will break. And trading toward it, like JVC does often, you don't have to wait for the break. You can get a few ticks just on the way to it under these conditions. And that's really powerful. So again, if you just look at these things as, as trading unfolds during the day on my fast views of it, and again, don't need any footprints or anything to do this. You just really need a 15-second and a 1-minute chart. But if you have footprints and you can learn to qualify edges and ledges and qualify, the energy of high volume reversals beyond just the wave volume, and look at the small footprints, that doesn't give you different information, and you can do it without it. I want to be really clear about this. So, for example, if we're talking about these guys right here, what they do is they help you decide what's happening. Remember, an LRC range just basically tells you that the edges are where things are likely to happen. And this tells you what is happening by watching that. So does the wave volume. It's just this is slightly more precise, watching the delta or watching the trading on the dome. So I want to be really clear about that, though. A guy like Surfer Dude doesn't use footprints at all, and he has no domes. The only chart he has a 15-second chart in Ninja, which is not even a great platform, but it works. So again, don't overthink how to do these things. They are very straightforward. And the other tools just add more information. If you want to use a footprint, that's fine. It's giving you more information. If you want to use a 30-minute footprint and look at the structure, that's useful too. But for these types of trades, that's just further information that might help you make a good decision or not. The decision you really are making is on these criteria. You don't need that other information. And I have found, both teaching and doing this, that it's a little bit of a double-edged sword having more information. Sometimes you don't need it, and all it does is make you think slower. So I've gotten really good at compartmentalizing. Like, even if I've got my full screen up with all of my tools, I don't watch like the 1-minute views unless I'm looking to see what's going on in terms of trends. I don't need it for anything else. So I literally just close this panel off in my mind, and I just watch whatever it is I'm watching at the moment, which is usually the domes. So remember, every tool has a very specific purpose, and that's all you use it for. And if you're at the stage where you can do it without it, I recommend leaving it off. It's really good practice. Like, take the prices off your charts. I'm not kidding. If you take the prices off the charts in the dome, then just trade the action. You'll get even better at trading the action because you won't be distracted by the additional information about what the actual number is, whether it's 20 or 25 or 30, wherever we are. You learn to just read the action, not the price. And then when you add into it, the inflection points of certain kinds of prices, like the quarters, 0, 2.5, 5, 7.5. That gets you just a little bit better at it. And this is the bottom line of this whole course. This is about learning to spot simple little patterns really quickly. So this is what I was looking at. I was looking for with my definition of good scalping. Being in the market as little as possible, taking advantage of very high odds, short-term price patterns. And that's what I was looking for. That was the perfect definition of what a good scalper does. And you may use slightly different twists on the patterns. You may develop your own patterns, but basically, that's all there is to it. Lee pinged me yesterday, and he said I found a way to pass a 50K eval scalping in one day. And I said, what is it? He said it's like your stuff. It's just a slightly different version of it. And what he did was he's using a 30-second footprint with just zero prints on it. And the zero prints show aggression, and he's fading the energy back to or away from the zero prints using other structural clues like the min delta and max delta. And that literally is just a slightly different twist on what I do on my little delta footprint 15-second views here. And it's great. It'll work really well, particularly if you like that idea of zero prints. I see the zero prints on the dome, so I don't even have them running on my fast footprints. But I get the value in doing that. It's a cool way. Again, all he's doing is he's looking at HMOMO and he's answering the question, should I join this or not? And is it likely to continue? And the IPs are the zero prints themselves. Does everybody get that? This is a really, really interesting point that came up. And it just came up yesterday. As I said, Lee just told me about this, and he thought he's actually building a tool for the new emoji that's going to have some of that characteristics in it. Let's see. I totally agree. You suffer. Brent, and we all do. It's just part of people that are thinkers. It happens. Let's see. A question: wave volume low on up moves. I'm not sure what you were asking there, Jan. An up thrust is just the opposite of a spring. We are trending down, and the attempts to go up have much less energy or volume in them than the pushes down. That's what an up thrust is, and it's the short entry criteria that I was just showing you on those trending views. How do you use zero prints? Well, that number one, that's a whole nother topic, and number two has nothing to do with what I do. I was explaining to you something that Lee's doing. That he's had plenty of material on zero prints. Probably the best place, I think, to just get a quick summary of how he does that is look on his emoji site, and I'll just give you a link real quick to that. He's got some really good kind of knowledge-based user guides in here, and I would look in there and just look up zero prints, because he explains that pretty well there. And again, it's really not my thing, but it's a clever way of doing HMOMO, and it, again, just you can find tools that give you information on the patterns anywhere. 15-second chart, fast footprint, zero prints, emoji zones. They're all telling you the same thing. Is this a spot I can lean into the market, grab a few ticks or more? It's not always just a few ticks. That's just kind of the default. Don't get greedy. It might be 50 ticks. Is this a place I can do that? Is there a spot I can lean on? And, is it zero print? Is it an emoji zone? Is it a wave volume? Is it the range? There's nothing about ranges on here because ranges are a very dynamic topic, and I talked about it extensively in the middle sessions. But ranges are about what's the session range, what's the LRC range, what's the relationship between them? Is one really big and one small right now? And we talked about this extensively. Those are all significant edges to look for. Significant advantages to look for when the market is trading in ranges, which is most of the time. But the range patterns are not explainable in bullet points because there's way too many factors there. And so to summarize the range stuff, let me just start really clearly with this. The first thing, if you're going to understand ranges and really get the hang of doing the range scalping and trading, which is really the most powerful and the most common thing, high volume reversals are really cool, but they happen when they happen. What if you want to trade when there isn't one? Well, again, the things to look for. Whoops, sorry, that shouldn't be there. There's a bump on my desk. Okay, so what's the session range? How big is it? We've had session ranges of 160 handles, 160 points lately, but typically 40 points is normal. And, is it big or small? And then what's the immediate LRC range at the moment? How big is that? And where is it with respect to the overall range? Are we at the edges? Those are the best spots, here and here. If we're in the middle of that, that's more dangerous. You're less likely to be able to predict what's going to happen in the immediate future. So we're looking for places where we can trade the edges of the range, particularly if the LRC range is small and at one end or the other of the session range. That's the best set of setups in terms of odds. And again, we talked a lot about how to actually do those trades, and it just doesn't work its way well into bullet points, but I didn't want to ignore it completely. Okay. Okay. We talked about ledges. We talked about wave volume. We have reviewed all of that. I have answered my own question about what a good scalper does, spends as little time in the market as possible. When they're there, they're looking for really high. The first priority is high odds of something happening. Not how much money I can make, but do I know or can I predict easily what's going to happen next? Can I do one tick drills? Is one tick an obvious thing I can do? Then do it. Because again, that's the first question. Can I predict what's going to happen reasonably risk-free or low risk? And then once I can do that, what patterns can I see to take advantage of the edges? I know that if I trade high volume reversals under these conditions, or ledges under those conditions, or wave volume under these conditions, or HMOMO at the open under those conditions, I know if I do that there's certain things that are always true. Number one, I know when I'm wrong quickly. Number two, I can protect my profits quickly in all these scenarios. And then if I get runners and there's more there, great. But if not, at least I can high odds get in, high odds get my profit and get back out. And that's it. That's all I really want to do. If I can do that over and over again, then that's really highly paid hourly work. And that's why we're here. So, and then again, also, if you are looking at swing trading setups or intraday, and you're a more structural trader, you want to catch bigger moves, that's fine. All this does is give you really, really good spots to start those trades. These are great entries to anything structural. So it's perfectly complementary. Alrighty, that is the summary and kind of the recap. And again, I don't want to make this session really long, but I wanted to go through what's important, and I wanted to go through what I hope you learned for the week. And I think we've done that. So now I want to go to the last piece of this, which is Q&A, open Q&A. What questions do you have, if any? And then next steps. And next steps, I hate to say it, next steps is, I'm not joking, next steps is really easy. Does anybody want to take a stab at what your next steps should be? Because they're quite simple. This is your next step right here. Yep, Jose, that's it. And I'm not being flippant. I practice all the time. You guys watched me practice live. And this is something like, you got to do this all the time. It's like Formula One. If you're not in a Formula One car every day, and you take 2 months off and you get in one, it's going to be dangerous. Your skills are going to be rusty. It's like the Ides of Monday. So that's why we have the Ides of Monday and we trade light Mondays, because this is so skill-based. And people just over and over dismiss this point. Once I understand it, I'll do it. Or, once I get my chart set up, it'll show me that I buy here and I sell here, and, I won't need to practice. It doesn't work like that. Your tools will help you see patterns, and the more you practice, the better you will get at executing against those patterns. I've been doing this now a ridiculous amount of years. Oh gosh, today, let's see, I am 62 and I started in 1973. So you do the math. It's a lot of years, but I still practice constantly, and I'm constantly working on refinement of my edge, that idea of improvise, adapt, overcome. You're never done. It's always about progress, improving yourself continually. There's never perfection. You never achieve. You're never done. You never have the knowledge and then you just go make money. And this is a really important point. So I'm emphasizing it accordingly. Are there any questions? Let's see. Do I use market replay to practice? That is a really great question, Jan. And the answer is I don't do it and I don't recommend it. And it's a very simple reason why. We are teaching our brains to make very fast decisions, and we don't really understand how our brains do that. A perfect example of that is all the things we've talked about in the book, The Hour Between the Dog and the Wolf. Your brain can make decisions that aren't possible. You can't get a signal from your eyeball to your brain to your hand to your mouse to your platform. It's not possible to do that fast enough. Yet sometimes you'll see a setup and you'll do it that fast. How is that possible? We don't know. We just do it. So the flip side of that is your brain remembers patterns. The event that happened, a week ago that you were watching live, if you go back and trade that with replay, you may not remember, but I promise you, your brain remembers seeing that. And so the problem with trading replay is you've seen it before. And I don't think it has a tremendous amount of value in honing skills. I think the proper way to hone skills is get in the market and trade it every single day. Whether it's sim or it's real money or it's an evaluation or all of the above, as I recommend, including some play time. Let your monkey play now and then. You guys have heard this from me before. I think that's the right way to do it. Now, I do know some people that like to use replay and they believe they derive some value out of it, but they also agree with what I said about, you are seeing things you've seen before. And so the quality of it is limited because of that point. But it's certainly better than doing nothing. So practice is practice. So how's that for an answer? Does that make sense? Thinking Fast and Slow. Absolutely. That's another great book, by the way. JVC, replay is great for testing mechanics of your tools, buttons, shortcuts, but exactly, it doesn't teach you anything about getting better or making decisions. Yes, exactly. That's my take on it. Elena says, would I recommend trading MNQ for newer traders? Okay, yeah. Here's the deal. I like the ES overnight because it's the thickest. I like the ES at the open the best because it's the thickest. I like NQ the rest of the trading day because there's the biggest opportunities. It moves the most. But lately, because of all the volatility, I have not traded NQ at all because it's just too thin. So normally when the market is under relatively normal conditions, I would trade ES at the times when its thickness protects me more, like the open and like overnight, where a big sweep in NQ, because it's so thin, can be so long. And the same thing with CL. And for that reason, I really try to stay away from those when that's possible. So ES is my first choice under those conditions, or volatile markets like right now, because it trades like NQ. And then under normal conditions, I like it at the open, and I like NQ all the rest of the day. So great question. And MNQ is a great vehicle. I trade MNQ over NQ simply because I rarely get a good entry on a one lot NQ trade. It just moves too damn much. You know where you want to enter, but actually executing at that spot can be really hard. But, again, like with MES versus ES, MNQ gives the ability to break one NQ trade into 10 little pieces if you want to. And that gives you so much better ability to get decent entry. If you use 5 of them and it's a half an NQ, and you use the 5 to get a really solid entry around the spot you want, and not just all 5 at once, that's a powerful addition that it gives you. It's an additional capability that you don't have just trading NQ itself. So absolutely, if you're going to trade NQ, use the micro and use blocks of them and scale in and out, because it's just too hard in NQ to get in at the right spot with a one lot. And so good question. Sorry, I got distracted for a second. Okay. Let's see. How would one go about learning more about using scalp ideas as potential entries for longer term trades? Elias, good question. What I would do is divide the two not into two different distinct things, but I would think about it in terms of the distinction in the tools and what you're doing at the moment. So let me explain what I meant by that statement. So let's say we don't care what the price conditions are right now, or the price action conditions. Let's just say the market's trading, and I'm looking at some sort of structural idea. So this is going to be kind of a hypothetical example of your question. It's a good question, really good question. Okay, let's say this is the structure I'm looking at over here on the left, and I see this. Boy, real clean exhaustion, not quite a price rejector, but the last push up, ran out of gas. There's a couple of zones above us where there was a lot of supply. And so if I saw this condition and I was thinking, again, assuming this was a good structural idea, that, there's some short up here somewhere that I want to do, or I want to, trade the short, the top of the session there, that might be a better one, where all that supply was. And so what I might do is look at the scalping patterns, and I would look for how will those support me in doing that trade. So for example, if I'm looking to trade inside out toward that spot or outside in from that spot back, which of these might be helpful? Well, let's say I wanted to do outside in from that spot. So I was expecting, that let's say this was UB. It wasn't a clean top, but there was UB there, and all of this, the supply wasn't there. So I was thinking, okay, we're going from here, we're going up, we're going to take out the UB. That's my structural idea, but we're down here at 20 and the UB is at 37. Okay, let's say that's the case. It's not, but let's say that's the case. All right, if that was it, I would be looking for certainly the ledge criteria to be in play, because that would give me an even better shot at when that UB was going to go. So, here's a high volume node. I'd want to be above that high volume node and going that way, and I'd want to be at least at 33, but that would give me a really good shot at that ledge break. So that's a simple example of how I could use my ledge criteria for scalping and price action to help me game where I might get long here for a UB break of the high of the session. And I would use those exact same criteria to do that. So that's a simple example. It's a really good question. And they're totally complementary. Often you find the beginning of an outside in trade at the boundary, like we had down here at the edge of the session or the initial balance volume. Often you get high volume reversals at those back in. The outside ins are started with high volume reversals, so that's worth looking for too. And over time, you start to see how which patterns will help you get good entries to structural trades. But pretty much it's all of them. It's just certain ones go with certain setups, like ledges and UB go together because they typically occur at the same time. So that's a great question. I wish I could give you more examples. We don't have time for more, but there's a lot of good ideas around that. So that's definitely something to look for. Alfredo, what about using the come to me strategy for MNQ? Oh, absolutely. That's not a strategy. That's the only way to trade NQ is to let it come to you. But that's very different than these particular setups. That's just looking at the energy of the trading. Here, I'll do that right now. Let's push this to full size and rescale it real quick. And so this is NQ during the session. And this is going to be really hard to read because we were going sideways at the close. So let's not do that one. Hold on. Let's do, here we go. I'm just going to drag over. This is a 3-minute NQ from one of my other monitors. And this is a really good example of what that looks like. Let's say you were trying to, you were thinking about, a short, or you're thinking about a long. This is what I mean about letting it come to you. You really got to watch the ranges that it's worked as extremes. And so like up here, I might be thinking about a short, but I would let it come to me, because that supply up there was obvious, or this demand down here. So that's what I was talking about with that. And that's still true. It just isn't part of the setup itself. It's just the kind of where you should look for entries in NQ is always going to be letting it come to you. If you try to just join NQ at a particular spot without having a really clear idea that there's some sort of, at least, short to intermediate term supply and demand there, you're asking, to get run over, because that's what it does. It runs people over that try to do that. And that's just the nature of NQ. So that was a good question. Let's see, Waleed, sometimes I see trends developing in the Asia session. Yes. No, it's, let's see. So let me read the rest of your question. Trends developing in Asia, given that professional traders and volume is normally low or at the beginning or end of RTH, all of the other markets, the Asian markets and the German markets and London, all of them have a similar pattern to the way that our markets trade. But they're just not as world dominant as the US CME indexes are. But yes, you often see similar kind of events happening. And again, in our overnight, when those guys are open, it's often mimicked in our equities, what's going on in their regular trading hours over there. And so there's a lot of interesting stuff to look at with respect to that, and particularly for traders that don't live in the U.S. And this is something Lee and I have talked about doing some classes on, like trading the Eurex or trading the DAX, and all of those are legitimate. And yes, the patterns are very similar. They have initial balances. All of these price patterns occur because these are really patterns of just human beings, being greedy and being fearful. That's what creates these patterns. So it can occur in any market. But I continue to think, because of correlation and because of the volume, because of the liquidity, the best places to play are in the U.S. CME indexes, if that works for where you live and your situation and your job and your time frames and all that. But excellent question. Have I ever scalped the bond market? No, I've watched John Grady do it, and he scalps the bonds, and a scalp in the bond market can take 4 hours to get a tick. And the tick values are really big, which is nice, but they're so thick. So that's like the opposite of the NQ, Jeff. They're so thick that they're really predictable, but it's like watching paint dry. I can't do it. I have tried to. Even just watching Grady do it is painful for me. But there's no question there's a legitimate edge. And the other thing that's cool about the bonds is there's 3, 4, 5 instruments you can put up, and they do tend to work in a correlated environment. So there definitely is a legitimate place to scalp there. And a lot of older people like scalping the bonds because they move slower. That's what Grady says his reason is. He used to be a prop trader, and now he's not my age. He's younger than me, but he's close. And, he likes trading the bonds because they're slow. And, I don't know, maybe when I'm 90, I'll slow down like that. But I like the speed of the equity indexes. I could never trade the bonds. But yes, there's legitimate scalping opportunities there. No question about it. Currencies. Oh, that's an interesting question. The currency futures, yes. There's some really good trades. In fact, in the past, I've talked about this in the Sunday sessions, and I like to trade the euro dollar and sterling to the dollar. But that's futures. I do nothing in the FX world. The FX world is total nonsense. So no currency pairs, but the futures, absolutely. Just again, understanding that with the exception of the two that I mentioned, some of them aren't very liquid. The yen is another good one. The yen dollar, that's another good futures contract. So basically, those three are pretty much the only ones I would play regularly: the yen dollar, the euro dollar, and the sterling dollar. Good question, too. And yeah, those are really, really good scalpable markets. Everything we've talked about in the Scalpathon applies to those as well. But again, understand, every market's different. Every instrument's got its own personality. And the big trouble with currencies is what? This is a good little quiz question. What's the issue with trading currencies as a scalper, or any, scalper or not, any sort of approach? What's the issue with currencies? There's just one general overwhelming issue that you always have to keep in mind if you're trading currencies. Does anybody know what it is? JVC, do you know what it is?
Sorry, I was doing something in the pit. What was the question?
The question I'm just throwing out to everybody is, if we were talking about currencies and whether they're also scalpable, and I said they are, the future is not the FX. Mm-hmm. And then the question is, but there's one thing, if you're going to trade any of them, whether it's sterling or it's the euro or it's yen, the three that I said I would do if I was trading the futures, what do you constantly have to be on the lookout for? What is the big day? Exactly. Yeah, Elena nailed it. Oh yeah, the central bank influence.
And you're not talking spot forex, right?
No, I'm not talking spot. I'm just talking about the future. Spot forex is total stupidity to play that.
Absolutely.
Those are dealers making money off spreads at your behalf. That's all that's happening there.
They trade against you. Your own broker trades against you. Yeah. You don't know that. Stay out of forex.
Yeah, they can literally front run your trade, and they do it all the time. So yeah, but absolutely, the governments have an amazing amount of control and influence over their currencies, and they can decide to do something suddenly, and it's like if American Airlines decides to buy a bunch of oil to hedge Christmas, they can move the price so quickly, so dramatically, that you're really just at the mercy of that, and that's the one thing that I'm always concerned about when I'm trading currencies. So I tend to try to trade them at times when that isn't going to happen. and again, you just have to stay really tuned into what's going on in that particular world. And lately I've really liked the the euro and the sterling trade, again, even with the war stuff that's been going on, there's been some good action in those. In the futures, again, I'm talking about 6E, 6J. We're talking about the futures, not the pairs. Good question, though. Yes, you nailed it. Centralized manipulation of the governments whose currency it is. They do that. They can do it, and it happens all the time, and it can really run you over. So the beauty of trading, again, the reason we keep coming back to the CME equities are the sweet spot if you want to trade is you have 3 or 4 things working in your favor. And let me just review what those are. Number one, the CME is the most centralized, transparent exchange on the planet. There are no market makers. When I put an order up, I am making a market. When I say I want to buy and somebody sells to me, we have done a trade. There's nobody in the middle of it. He made a market on one side, I made a market on the other, and we executed a trade. And it's that simple. There's very little nonsense, and they are the thickest of the markets. They're the most predictable. They're the most liquid, and the rules are relatively in our favor. The CME has lots of nonsense, the professional versus non-professional and all that crap. But the bottom line is, compared to some of the foreign markets, we're much less restricted, and it's relatively free to do what you want to do without a lot of intervention on behalf of the exchange or a lot of costs. They charge a reasonable amount, but they provide a good service. So that's my take on that. And the fact that you have correlation and you can look at the 4 indexes next to each other, and the fact that they are derivatives of hundreds in the case of the S&P 500, 500, or in the case of the RTY, 2,000 equities. So they're derived from something that is easy to understand and easy to determine the current value of equities, because you can see that when they're trading. And so for all of those reasons, it makes the CME equities the best instruments to play for this style. Order flow is about looking at the information about, the traded volume. And so the quality of that information has to be really, really good. And that's the problem with Forex. People are trying to make order flow decisions on Bitcoin. We have no idea what the actual volume in Bitcoin is. It's just whatever the dealers are reporting, and they lie. So, you can't rely on the inputs. So you're going to get bad outputs. That's just classic garbage in, garbage out theory. So just go where the best information is. Have I ever traded commodities like wheat? Yes, I trade a bunch of other stuff, but I swing traded, and I never talk about it in TRG because it's just too hard. But the copper is a good one. Pork bellies, wheat. My favorite trade I used to do, I don't do this anymore very often, was the crack spread. I wish I was doing it right now. I don't have any mental energy for it. The CL RBOB crack spread, which is, you crack a barrel of oil into its distillates, and one of the distillates is gasoline. And that's an actual spread trade, the difference between CL and RBOB. And RBOB is refined gasoline. And so I trade a lot of other markets. Right now, one of the ones I'm watching very carefully, and I've been playing a little bit in the metals, as gold's been up, I've been playing in copper. Copper's one I've always liked that I don't talk much about. It has some really nice movements, and it's a relatively liquid, none of these are liquid compared to ES, and that's the problem with any, wheat and pork bellies and any of that stuff is, copper is that there can be no bid at all for many price levels or no ask. Because they're just not that thick. So you have to swing trade them over longer periods of time. Intraday, they don't trade very well. So again, unless you're catching momentum, in which case everything trades well in futures with momentum. But you don't always get that. So good questions. These are great questions. Let's see. Do you sometimes filter orders by size, like dropping the one lots? Yeah, if I'm looking at a tape, I do that a lot. I'll just look at like the 10s on up. It used to be you could filter like an ES for 100, and the big players would always be doing stuff in blocks of larger than 100 or more. And that's changed. Jan, that's a really good example of something that's shifted over the recent couple of years. Even the big players that are trading big giant blocks are breaking them up more. And so instead of seeing hundreds go by, I'll see blocks of 25s, and there might be 8 25s, and instead of 200, and that's something relatively new the last couple of years, and that's made tape reading much more complicated. And that's why, you see my tapes come and go on my screen. They're always there. I just have to minimize most of the time because I only watch the tapes, the actual, where it displays the volume and the price, trade by trade. I only watch that under certain conditions. And with this volatility, I don't watch it at all because it doesn't really help me. We're moving around across too many prices too quickly, and it's just too hard to assimilate that information. So good question. All right, boy, that was a bunch of really good questions there. I'm really impressed. You guys, I've been impressed throughout the whole Scalpathon. You guys have been here. You've asked good questions. You've come up with the right answers to pop quizzes. So, when I first decided to do this, I had very mixed feelings about it. I've been trying for the last 3 years to find ways of working on a specific topic like scalping with a small group. And we had the small groups last year and that was okay. And so when I first decided to do this, I thought, well, either nobody will show up and I'll just do it myself, or maybe I'll get a good group and they can learn something and we can see some examples. And I'm really pleased with how it went. We got to see some good examples of, what the P&L looks like when you do this. And I posted that and what getting swept out of something feels like. And I think we got a lot of really good examples to see in the recordings and in the materials. So I am pleased with the way it went. And if you have any feedback, you want to make privately or publicly, please do so. I didn't put together any formal, feedback forms or anything or graduation. And I wanted to keep this kind of casual. We're a small group and, didn't feel the need to do that. But I really would love to have any feedback you have if you want to do it, as I said, publicly or privately, or if you don't want to give it to me, give it to JVC or Lee.
That's what I was about to say. You can always ping me anything you want to say.
If you have something negative or just something constructive you want to say and you don't want to say it to me, by all means, reach out to JVC or Lee. And I really am interested in that. And I know I have kind of a strong personality, and sometimes people don't want to come directly at me, and I respect that. Okay, will TRG eventually transform into a prop firm? Very interesting question. We have talked about it. Lee has considered doing one that would kind of be a sister company to TRG like Emoji is. At the moment, there's no firm plans, but it is something we've talked about. We would love to be the prop firm of our traders. There's a couple of hoops we have to jump through to get there. And we're looking at them and putting them in place. So it's possible. Again, it would probably be a sister company and not TRG itself, but good question. And I'd love to have that, where we can all, trade, the same money, if you will, and potentially share in each other's proceeds. That would be really fun. And over time, we could develop a really solid group of traders. That's why we've talked about it. It's a really cool idea. If we could make it happen, I'm sure we will try to do so.
And I am totally pushing for it, just so you know.
Yeah. It's the steps to do it right now. We have some of them in place. Lee's formed a couple of organizations that have that are going to be doing the banking and whatnot. You're all familiar with this because we've shifted some of the banking and how we bill monthly and whatnot. And first we had to clean that up and get it all together in one place, which Lee's done now. And he's got an emoji release, the new update of emoji we've been waiting for quite a while. And that's going to be the next thing that comes out. And then after that, if he's so inclined, he would have to get certain licenses and create another entity in the U.S. On top of the one that he already has. And so it's doable in 2022 if Lee decides he really wants to do it. And again, we've talked about it, JVC and he and I talk about it every now and then. I'd love to see it happen. I would contribute to it in any way I could and potentially fund it as well. So, it's a very interesting conversation. I can tell you this, it's not going to happen very soon. If it were to happen, I'd be surprised if we could get it done. It would be the very end of the year. And even then, I think that's probably a push, but it might happen. Okay. Are there any other questions? We're right on the 1 hour mark here, which is kind of what I was thinking for this session. So is it possible to replicate the Sierra charts to NT? Good question. What is it you're trying to replicate? Do you have free print? Do you have Lee's template for Ninja? It's called free print. I'll give you a link to it right now. That's the place to start because Ninja doesn't do footprints very well. This will do a lot of it. So I'm putting this link in the chat there for you. But is that what you meant? The footprint stuff? Is that what you're asking? Yeah. Okay. This is close, but you have to understand that if you're really going to do hardcore stuff with footprints, you don't want to do it in Ninja. That's literally why I run Sierra Chart, is to do the footprints properly. And I struggled with Ninja for several years with MZ Pack, and I did use footprint or free print, and it just you have to beat your head against the wall to do order flow properly in Ninja. It's just not set up for it. Now they've said they're going to rebuild the back end, or they're going to re-architect the back end. The problem with it is it doesn't divide up bid-ask data easily. And so a program has to constantly build their own buckets to divide it up. And so that's the short and long answer on that one. Start with free print, and it should be able to do most of what you want to do, most of the stuff we've talked about. Okay, Jan, could I maybe eventually compile a list of videos in the library that would be good to watch? We already have that.
Yep, and that was my response.
Yeah. JVC's done a great job with that. There's a bunch of playlists. If you go to the library, here, hang on a second, and he's done a really good job with that, and I strongly recommend checking that out. Hang on a second here. This is slightly revamped since I was here last. Okay, and so
right at the top.
Yeah, right at the top. Scalpathon, recommended viewing playlist, Scalper's Delight, setup fundamentals. That's where it's at. And then specific setups like the Open 5. Yeah, there's so much good material in our library, and JVC is doing a really good job of organizing it. But sometimes you just have to dive in and look around.
Yep. And always feel free to hit me up if you need help trying to track something down or find something within the library. And so everyone knows, for those who maybe aren't already aware of this, at the moment, because of all the website changes we've made in the last 3 months or so, the search functionality on the website is completely broken right now. It just plain doesn't work. So right now, all this lovely work I did to put keywords and tags and stuff in to be searchable and all that is for naught. You can't use it. But we're going to be fixing that as soon as we get higher priority stuff out of the way. So
yeah, and we have so much potential. That's such a good asset, our library.
Yeah.
There's so many great examples there, but you got to know where they are, and you got to find them. And there's something to be said for just going through those playlists of all the videos that are on a topic, because I lost count. I mean, it was hundreds of times. There's examples that we were saying something and then it happens as we're talking about it, and nothing teaches it better to you than that right there. So, all right, thank you for the kind comment, Jose. I totally and greatly appreciate that, and I'm really grateful that all of you signed up and joined me for this, because as I said, I wasn't sure how, if it was a good idea and how we could really do it. And I thought, God forbid, what if I do all these live trades and for some reason I'm not in the zone and I'm just like not making any money? It'll be really embarrassing. But, I think everything kind of came out good. We had a nice set of trades to look at. I made a few mistakes. You got to see me do it. And I think I purposely leaned on being conservative because I really strongly suggest that all of you do that too. I mean, I could have YOLO'd a couple of times during the week and gone for bigger gains. But hey, I traded 5 days. I've got $1,000 of profit on a $1,500 target. 5 more days, I've got it. And then I just have to have the 10 days. And sure, there's a couple of cases could have made $1,000 in one trade, but the risk is too big. This is a trailing drawdown, $1,500. So, take your quick profits, get funded. No split, take their money, put it in your account, do it again. Jeremy Rivera, one of our members, he's done this like 25 times. He's built up his whole personal account just by doing 25K evals and then pulling out the non-split money. And if you stay just diligent and disciplined on that path, It's really pretty easy. There was no look. There was one day, I don't know if you guys saw this. Nobody really commented on it, but I put it there just because I was being honest. But I also wanted to see if anybody noticed. There was one of the days I posted my trades. Oh, they ended up in 2 streams. Wait a second. Here we go. I posted every day, and one of the days, woke up, grabbed a few scalps, this one, the one that did the sweep, we talked about that one. And then this one here, I think this was Wednesday. I was out on a minor medical emergency. This is true. I talked about it briefly. I had to go to the urgent care and still managed to pull off some good trades. Even had one of my bigger losers. That's the second biggest loser I had in the week. Still got a good week out of it. And you can do this. You just have to really stay focused on the patterns you're looking for and not overcomplicate it. It's really simple. Don't overcomplicate it. The way that you overcomplicate this is by practicing. Practice. There's no such thing as too much practice. So if you wanna do something too much with respect to scalping, practice too much. If that means replay, do replay. Trade live, trade in sims. The more you do it, the better your recognition of these little baby events will get. And I think it's really clear. I mean, would anybody disagree with me that this is a definable edge? I think you'd have a hard time arguing that I don't have an edge using these criteria. I mean, we just spent a week seeing it, and there's several hundred trades, and there's 3 losers. So statistics are pretty strongly on my side that this is a legitimate edge. So I don't think I need to defend that, but I thought I'd just say that in case anybody was wondering. All right, let's see. You have to take profits quickly and often when you are in an eval with intraday. Absolutely, unrealized profit drawdown. That's exactly it, Brent. That's why this is the right way to do it. And right now I've got 3 of these going. The one that we did was an elite, and I also have one that I have to just ride out the 10 days going at Lilu from their last sale. And a lot of times I don't even stay with them because I don't need their money. But I like the idea of the split. If I can do it quickly, not pay the monthly additional fee for their service with $80 or whatever, I'll do it. And with a trade copier, it makes it really efficient if the market's trading reasonably predictably. And last week, in addition to the trades you saw, I actually copied those into my cash account too. So it was a nice week. And and the biggest profit of the whole week was like $100, $125. That was the largest trade. And there's a message there. There's a lesson there, and I hope you guys are all getting. And I think you are. I think, judging by the comments and the questions, I think everybody pretty much understands that. So cool. Are there any other questions, or is there anything else I can do for you while you have me here? Thank you. I really have enjoyed this, and I'm excited it worked out as well as it did. I had a kind of back of my brain thinking this might just be a rough week, but I'm glad it worked out. I'm glad you guys got to see some good examples and had a good learning experience. So cool. Thank you, Brent. I appreciate that. Thank you, Jan. All right, let's go ahead and wrap up then. JVC, do you have anything you'd like to add?
Just on the note of what you were talking about with the consistency day in and day out, that's what this is about, especially as a scalper. I would say more so than any other style of trader, structural, et cetera. I mean, structural traders can look for sort of these big swings and go for these big trades and so forth. But as a scalper, you think that way, it's going to kill you. It's just about that, just day in, day out. Get the money, get the hell out of the way. And if you can just do that consistently and not fall into the traps of, oh, this is going to be the really big one, I'm going to size way up, or I'm going to hold longer, I know it's going to keep going, or all of the stuff that every one of us has done, has thought, and has fallen victim to. Just remind yourself that this is a marathon, not a sprint. Ironic, given that Jeff used to be a sprinter. Yep. I find that amusing.
Yeah, I do too. I find that.
Yeah, just keep at it. Practice your skill. I've made the comparison to learning a musical instrument over and over again, or learning. I actually like the comparison of learning to read music even better, because you show sheet music to an average random person on the street, it's a bunch of dots and squiggles and lines. You show a chart to the average person on the street, and it's a bunch of dots and squiggles and lines. And but hand it to a master conductor or musician or a master trader, and they see the order. They understand what it's saying. They know how to read it. And that just takes time, especially because then we have to actually execute against it. It's not mechanical the way playing sheet music is. That's where the things diverge a bit. But the basic concept is there. Just keep at it. This is going to take a while. Don't get frustrated. Just keep at it. Keep posting in the pit. I tell everybody, do an accountability stream. Waleed, I saw you started one, which is awesome.
Yeah, that's really, excellent. Really I saw that too. And you even posted some of your scalps here. That's why I brought this image up, JVC. You're not a scalper, but you know, look at that, 67 ticks. You know,
I was starting to really to get some of the nuances. I mean, I understood the broad concepts because I've sat through these things so many times at this point, but there were nuances there that I didn't quite see the way I needed to until this week. So this was really valuable. And I think trading for me anyway, the unusual times of day, especially the early morning, was really important to that because, like you've talked about so many times, overnight can be so much better for scalping because it gets range bound and it's very predictable edges and that sort of thing. And sure enough, we saw a lot of that. And that's not always easy during the first couple hours of the day when I'm usually focusing on the market. You know, scalping then, you better be really damn good because it's moving like crazy.
Yep. Yeah, all great comments. And I totally agree with everything you said. I can keep going just on the same topic, but I know we need to wrap up. So this was fun. I would really like you guys to continue to do what JVC said, you know, an accountability stream, post your trades, post your hardships, and, you know, continue refining this one little skill of this little tiny pattern recognition and these little Momo patterns and reversal patterns. And I'd love to hear updates along the way. So keep me in your loop.
Yep.
Thank you.
Keep us posted for sure.
And again, you know, if you have anything that you want to say, not to me, by all means, reach out to JVC or Lee or anybody else. You know, you share anywhere you like. But I do encourage you to do that because we only get better by getting feedback. Sometimes we don't want to hear it if it's bad, but it's useful nonetheless. All right. Let's go ahead and wrap it up then. Thank you. The videos, I think we're totally caught up except for this now in the library, aren't
we? Yes, we are. We're all caught up.
So go review and again, if you have any questions going forward, the stream will be there and be visible for everybody for a while. You can always post to it, or you could post to anything goes if you like. And, it's not like we need to keep private what we talked about here. There's nothing secret or proprietary. It was just a little focus group. Okay. And with that, we will go ahead and wrap it up. Thank you, Elena. Thank you, Donna. JVC, thank you for
the rest of your birthday.
Yeah, I don't even know what I'm going to do. I was asleep right before this. I may go back to sleep.
I was going to say, go back.
Yeah. All right. Have a good Saturday, everybody. We will see you tomorrow is the Sunday reopen, of course, the usual time, 2:45.
Indeed.
And we'll go from there.